Hi fellow traders, in this video or webinar or video blog or whatever you want to call it, I'm going to share with you the foundation for my trading. I've received many requests for this to help those that are not in the community yet for whatever reason understand what I do. This will not go into depth like I do in my classes, but it should give you enough information to help you understand my thought process and why I do the things I do. It's going to culminate with an example of how I trade in the morning and answers to the most common questions that I receive. So first, let's get this legal stuff out of the way. I'm not a licensed financial advisor. I'm not a registered broker, and I do not provide investment or financial advice or make investment recommendations. I'm not in the business of transacting trades for anybody else other than myself. Nor does any service I provide constitute a solicitation, recommendation, promotion, or endorsement of any particular security, or investment product, or transaction, or investment. I do want to throw in there, I didn't put it in here, because you may hear somebody may say, thank you for my dividend check or whatever. It's not that I'm investing for them. They actually invested in AverageJoe Trading LLC, and as such, at the end of the year, they get a dividend based on that. So if you do hear that, it's not that I'm investing for anybody. That's not the case. That they just own a percentage of my company, AverageJoe Trading LLC, which includes my actual trading. I'm just an average Joe trading stocks, and my service is solely intended for informational purposes only. I'm simply sharing with you the strategies that have made me successful. And with that said, I do not accept liability for any loss or damage caused in reliance upon any information that I share, because what it boils down to is execution. If you can't execute, then things aren't going to end well for you. And I know because that happens to me often. I have my strategies works. If I execute it, it'll work perfectly. If I don't, then it doesn't work. So it all boils down to, execution. Now, who am I? If you don't know, I'm an automotive engineer as well as a professional educator. I've been in and out of the market since 1999, but I started day trading full time alongside my daily job in 2014. I've used the education and strategies, processes, and reflection that I brought from my engineering and education careers into trading, which has been the keys to my success in the market. Now, I've studied several different professional traders to learn the fundamentals of day trading, and through that, I've been able to define myself as a trader who specializes in trading and growing a small account. I am most comfortable trading 500 to 1,000 shares at the most, and I'm just an average guy. I like to do things that the average person likes to do. I could go out and buy a BMW or something, but I would kill myself making the lease payments. I like simple things, so why not get something that I can afford? My granddaddy always told me, if you can't pay for it up front, then you don't need it. And he lived a simple life, but he got to do everything in this world that he wanted to do. And I'm just following that thing. So just a regular average Joe. I started trading while I was alongside my daily job. And I came to a point where I wanted more. And I did it. And so I'm sharing what I did because I see so many people getting led down the wrong path. And they're losing money, they're giving money away. And, it's not fair. So I'm doing everything I can to, help those and help those guys along the way. So let's talk about some truths here. One thing that a lot of us really don't know, and I didn't know this at first either. I didn't learn it until I was in the game. So do you really know what you're getting into wanting to be a day trader? Number one, you have no idea what your cash flow is going to be. And you know what other people are claiming their cash flow is. You don't know whether it's that or not. Unless you see it every day, you don't know. But you don't know whether that's going to be you or not. You have very little experience compared to the major players in the market. Most of us are going to come in grossly undercapitalized. And we don't have a business plan. Most don't really understand that, hey, if you're going to start trading, this is a business. And you can't trade as a hobby because it doesn't work. It's just like gambling as a hobby. You're not going to make money at it. So if you want to do this and you want to make money, you want to grow in it, you have to establish a business plan. We got to realize that we are going up against some of the best traders in the world. Their job is to understand and to learn and to know what we inexperienced traders are going to do so that they can make money off of us. We provide the liquidity for the market, and it's up to us to flip that script. Once we start learning what they do, then we turn around and we get on the side that they're on. And that's kind of what I've been trying to share with you guys over the last couple of months in the room. As this is what I'm learning, and this is how we have to start doing things. One of the big questions I get asked is, this stock, posted great earnings. Why is it going down? You got to understand what the professional traders are thinking and what they're doing. And, once I understood that, it makes perfect sense. So training, experience, psychological control, and the realization that you're not invincible or smarter than the market will lead you to success. Because, believe it or not, Wall Street is built on the souls of those who did not learn this lesson until it was too late. They thought they were smarter than the market, and they've been successful in everything else that they did. They come in and it just doesn't work. So these are the truths that we have to accept as we're going in, moving forward into our trading. Now, what I use is called a process approach. And as a professional educator and engineer, I firmly believe in the process approach to trading, really to anything. Because I believe that's the only way you're going to be able to be consistent in anything that you do. So I can honestly say this is a big secret to my success. And just to give you a snapshot, my trading process really looks like this. I have my morning routine where, I do what I have to do in the morning before I come. Now I go work out. I have to take my son to school, take care of everything. Then I come back and I go to work. I develop my watch list, build a trading plan, initiate the trade according to the plan. Then I execute. And then at the end, I reflect on the trades. It's a simple process, but each component in this process is important. You take one of these components out, and my trading suffers. If my morning routine doesn't put me in the right spot to start my morning, then my whole day suffers. So I have to make adjustments for that. So that's why I have this process. I have a routine, and everything that I do has a reason for me doing it. And I believe this is the best and the only way you can manage your trading day, because it's all about being efficient and getting the most out of the time that you have in the market. Now, during the first 30 minutes prior to open, you all know I make my watch list, and we're going to go through all of that in this video. I'm watching the tickers on my watch list, and I'm developing a trade plan for them based on the price action I'm seeing. But I'm going to have a plan for the going long. I'm going to have a plan for going short. I'm going to have a bias on it, and I'm going to have, where I would really like this stock to go. But I'm going to look both sides. If there's really not a trade plan for me to the long side, then I won't even look to take it long. But I'm going to develop a plan or see if there is a viable plan to the opposite side that I may have a bias on, too. So I ask myself these questions. What is my plan if it goes to the long side? Is there a viable plan? What if my plan, if it sets up to the short side? Is it a viable plan to the short side? What setup am I looking for? What are my profit targets? Where's my stock going to be? And the question that I ask when I'm looking at the trade plan is the profit window large enough for this trade to make sense? And if I can't answer yes to that, then that stock drops from my watch list. There's no entertaining it. Now, yeah, it can pick up volume and momentum and just trade to where it doesn't really make sense. But I'm not chasing those, because those are the ones that you chase, and eventually you're going to get caught and you're going to lose the money you made previously and then some. So just ask yourself questions like these when you're planning your trades. And it's going to give you a big advantage, because you're going into trading, with the battle plan. And with that plan, and you stick to it. And there are going to be times where, you don't execute perfectly. You're going to take a trade and it may not work out, and then something happens and you forget about it. So there's a reason why you need to stay engaged. There's a reason why, I go through and have trades to both sides, and if everything works perfectly, I'll execute. Now, here's an example of, a stock where I did not execute. Okay, now here's an example of what I was talking about, where when I put a stock on my watch list, I'm going to have a plan for it to go both ways. But I'm going to have a bias as to which way I want it to go. And in this case, I had a bias, and I initiated the trade, but it didn't follow through, and it turned around and it actually set up for the other side. But I wasn't engaged. I didn't execute. So I ended up missing to big trade. So here's what we're looking at here on EXP, and this was on Friday. We had a big gap down. We reported earnings, I think after the close on Thursday, and we had this big gap down on Friday. And my thought is, okay, we had this huge gap down, so we should recover. We should make this and start recovering some of this gap. that was my thought, because we had this huge gap down. I felt we were going to have some serious profit taking, which would drive this potentially halfway back up, and that's my trade. So I went in the morning with that plan, but I also had a plan to go short, but I didn't like the windows of opportunity as much as I like this. Now, we did have enough room to make money going short, but for me, the home run was to the long side. So that's where my focus was. And how I find all of these and all of that, we're going to get into in a minute. But I'm just wanting to explain to you why I need, why I have plans going both ways. So if we look at the 5-minute chart, I want to cover up some of this. Okay, here is the opening range. All right, so I get in, we set this 5-minute opening range here, which here's the study, that I have. This is a user defined study that marks the 5-minute opening range. And this is what I trade off of in the, first thing in the morning. So once we break the 5-minute opening range, I'm going to get long, because this is, my bias was to the long side. So I get in here. I do get to take profit. We don't make it to my second profit target, and we start to sell off, and I get stopped out at break even. Now, what I'm waiting for this to do is to pull back to this level and bounce and hold. And I will look to take it back long on the bounce, because we do have a lot of buying here, but then I know once we get to a certain point, we're going to have some profit taking, and then we should continue up on the trend. Doesn't always happen that way, because there's a lot of players in the market and we don't know what it's going to do. So we have to let the chart tell us. So as this was selling off, there's no trade for me in the 5-minute opening range when we have the VWAP, the 9, we have this daily level here, the 20, moving average, and then we have the 5-minute open range low. So the trade didn't trigger again until we broke through the 5-minute open range low, which triggered another entry. And but I had dismissed this stock because it didn't follow my initial plan, and ended up losing faith in it. And that's one of the things that we can't do. We have 2 trade plans. We need to execute it. And you can see, if I had executed my trade plan properly, I would have traded this stock the way you've seen other stocks that I've traded over the past couple of months. And we would have worked this all the way down. I mean, we're talking about, 4 points, 5 points on this that we worked all the way down. Now, yeah, the market bounced and we recovered late in the day, but I would have been out. I would have taken my profit, made my money, and I'd have been out. And this is the reason why we need to have plans going both ways. I had plans going both ways, but since we set up to the long side first, I kind of lost faith in it. I was disgusted with it. I let my emotions get the best of me on this, and ended up costing me this trade. So that's the reason why we need to have plans going both ways, and that's why I do it. So when you ask me in the morning, or members in my chat room ask me in the morning, what do I want, which way am I going to trade it, I try to say whatever way it's going to set up. I don't know where it's going to set up. I don't know how the market is going to digest this. I have a good idea, but I've got to plan both ways. and that's what I have to execute. Okay, so typically, and the plan is once the stock sets up, I get the signal, it triggers an entry, I just enter the trade because I trust my process, I trust my strategy, and I know that if it doesn't work, I can stop out. I'm not going to let it take all my money. I'll be able to trade more that day. I have my profit targets written out on my trade plan, as well as the technical level that I'm basing my stops on. And I've got my line in the sand number. So let's say I'm willing to lose $350 on this trade. I know where my stop needs to be. After I enter, I'll know where I need to place that line in the sand. Or if I don't trust myself, I'll put a hard stop out. But there's a line in the sand that I'm not going to let this trade go beyond, because this is the maximum amount I'm willing to risk on this trade. All of that's written down, because what happened to me early on was I'd have these awesome plans and the bell would ring, the numbers are flashing all over the place, the candles are jumping around, and I get that deer in the headlight look, and I totally forget what I was going to do. And I never execute my plans. So by the time I become hypnotized, it's too late to trade. So I started writing it down so that when that bell hit, I can keep reading that paper or that note card. And that helps me to know where I need to get in. What am I looking at? And where are my profit targets? Where's my stop going to be? You know, what technical level am I looking at trading off of? You know, and that's what I think helps me, or help me get over that hump. So all I'm doing is concentrating on hitting my marks and booking my profit. You know, I have my P&L. I don't even know what I'm making. I don't even think about it. You know, it doesn't help. You know, all I want to do is build a plan, execute it. At the end of the day, count my money. So there's some that say knowing when to exit is the hardest part of the trade. But if you have that plan ahead of time and you stick to it, you're going to have a better chance of letting your winning trades work and cutting your losses off, you know, quickly, versus the other way around. Cutting your losers off too quick and cutting your winners off too quick and letting your losers run. You know, it also helps with managing your emotions while in the trade. So when we get into the trade example, I want to explain to you why I scale out, you know, and how that helps me really, and establishes me for the rest of the day. All right, so for my scanning and charting, you know, we're going to start there. This is the most important component. This is the foundation of my trading. You know, for scanning, I use Trade Ideas, and FinViz helps me with my scans. And for charting, Thinkorswim and the DOS Pro platform, which we use for Speed Trader, Sure Trader, IB. So that's where my charting comes from. I'm not all over the place. I stick to kind of what I grew up on and what fits my eye the best. So stock scanners, they are a requirement for successful day trading. Some people don't believe in scanners. They just believe in, you know, they'll spend the extra time watching the news, you know, scanning through news and crowdsourcing, you know, using Twitter or StockTwits or, you know, whatever to find stocks that are hot that day. But if you're going to be a successful independent day trader, you're going to need stock scanners. There's going to be a point in time where you're not going to be able to get everything from those places. And you need to have the power at your fingertips so that you can make sound trading decisions. So a trader can have all the textbook knowledge of the markets, but if they're unable to find setups in real time, they'll never profit. Now, I have people that email me and try to quiz me on stuff. I don't know everything, because if it doesn't have anything to do with my trading, I could care less about it. These people have all of this textbook knowledge, and if I ask them, well, how much do you make? Well, prove it to me. And they can't. So, it doesn't really make sense. They have all of this knowledge, but they can't execute. And and that's just a product of what these a lot of these communities are putting out. They're putting out these people that know all of this stuff, but they can't execute. So, typically there are only 5 to 10 stocks in play each day for me. Out of those 1,000, I think there's like over 7,000 stocks right now that you can trade. But for me, there are only 5 to 10 stocks that may be in play for me. And then using stock scanners, I can filter out through all of those and come up with those stocks that I can vet to see if I can actually trade them that day, if they're going to fit my criteria for setting up. They have the basic, they filter through and they meet the basic standards, but can they actually give me a trade that day? So, using the stock scanners, I can choose the specific types, use all of the filters. I can also make complex scanners to look for specific chart patterns if I want to. Or I can use simple scanners to look for broad matches, such as stocks that have reported earnings. I'm a big earnings trader, so that's why I use FinViz at night. I can just run FinViz, come up with some stocks that are reporting earnings tomorrow. I can look through their technicals and look through the fundamentals and kind of determine, well, hey, these might be something to look at tomorrow. But I can't do it without a scanner. So the scanners are very important to me. And this is how my scans look first thing in the morning. I switch. This is my pre-market scanners. And then when the market opens, I switch over to, the intraday scanners. Now, I rarely use those. Because once I build a watch list this in the morning, I'm going to follow these stocks all day. Then the only time I switch over to my intraday scanners is if my watch list just dies. So, that's why I use just this one scanner. This is my main scanner here. The ORB pre-market scan is what I call it. Opening range trades are what I look for at the open. And I have this scan set to find me stocks that have gapped up at least $1. And they have less than a 500 million share float. And what else? They have an ATR of at least 50 cents. But we'll look at this in detail a little bit later when we go into the trade example. But it's filtering out all of those stocks. Actually, it's taking this list, this gapper list, and giving me the ones that are going to fit my criteria. That's going to give me the best opportunity for, making a trade. And what I do is I quickly look through this list. If I see this is, okay, it's a $15 stock, it's a 17 million share float, that's too low for me. My float minimum I think is 50 million shares. So if it's not 50 million shares, I'm not going to trade it. But I do have traders in the community that do trade lower float stocks. So I'm not filtering those out, for them. But for me, this is a stock that will get dismissed. This one is a $26 stock. We've got 109 million share float. That's in my wheelhouse. So I'll, put that one aside to, go through my vet process. Same thing with this SHNY. This is a $50 stock, but it has a 24 million share float. Because it's a higher dollar stock, I will entertain this. So I will look it up and see, what the deal is on it. If this was another $15 stock with a 20 million share float, then I probably wouldn't trade it. MAT is a $14 stock, but 341 million share float. So this is definitely a stock that I would look at. It's got an 84-cent ATR. Now, typically this doesn't really mean a whole lot on a stock that's reporting earnings or that has a good catalyst, because obviously it's going to move beyond that. But I look at it as a guide. So at a minimum, I think this will move 3 times its average true range. So 80, let's say 8 times 3 is 24. So I would say this stock has a potential of moving, about $2.40 on this day. I mean, that's kind of how I look at it. So I would put that on watch. Here's another stock. It's $13 stock, but 55 million share float. $1.63 average true range is within my wheelhouse. So I would take these stocks that pass that quick vet, and then that's what I'll go and start putting up on my charting. So that's the process that we're going to go through here in a few. So for my charting, now charts are important because they tell you where the prices come from and where it could potentially be going. There are 2 types of charts that day traders look at: the daily chart and the intraday chart. At least for me as a day trader. Now there are other day traders that may look at a weekly chart. They may look at different things, but for me, the daily chart and the intraday chart, they're key in my day trading. So the different chart types, they're going to show us a few ways price movement is expressed over a period of time. So simply put, this is how we see the price action. So having a chart that's easily interpreted by us is a must. You can't get away from it. So here's how my chart looks. On a normal day, this is how my chart looks. To some, it may look too crowded. But let's go through it. Let's break it down. And I'm going to go over everything that's on my chart, because going forward, you really need to understand what I have on my chart and why. So first thing we're going to look at, the lower study, is the RSI, the Relative Strength Index. This tells me if a stock is oversold, which is the industry standard is below 30. For me, below 20 is oversold. But, I go with the industry standard because that's what a lot of professional traders are using. And over 70 is overbought. So whenever we get into the green here, whenever we get into the green here or the red here, I know we're oversold. If we get into the green, I know we're overbought. So that's how I use the RSI. If we are well oversold, like right in here, I'm not going to look to go short because we made a lower low. Because this thing is way oversold. I want to be looking for a bounce to see if I could get a rejection and get into if I really want to take it short. So the RSI really gives me a good indication of, whether we're overbought or oversold. Now, the next one I add on is the average true range. Now, this is a little different because this is measuring the average true range of the previous 5 candles. This is what I use to help me know how far I need to allow this trade to work. If this is telling me that I've got a 39-cent average true range, well, let's say in this case, this is about $1.20. So when I get in this trade, I need to be able to allow for $1.20 to go the opposite way. So this is going to help determine what my share size is going to be. If my normal share size on a $100 stock is going to be $300, and I need to give it a 1.5, or let's say a point. Let's make it easy. And I need to give it a point because the average true range on this is 90 cents. I want to give it 10 cents above its average. So I need to be willing to lose $300 on this trade if I'm going in full size with 300 shares. Now the potential could be I will give up 1 point for 3 points. 3-to-1 profit loss ratio, that's acceptable. So I'm going to take that trade. And I know that I need to give it $1. Now, if I jump in this and say, okay, I'm only going to give it 20 cents, then you're setting yourself up to get stopped out because this stock moves can run a range of, let's say, 90 cents in this 5-minute window. And that you're just setting yourself up to get stopped out. So this, instead of me trying to calculate the range on these previous 5 candles, I just look at the ATR. I'll bring my cursor over it. It tells me right here what the ATR is, and I can go from there. So this is very important. But the good thing is these are lower studies and they're out of the way. All right, so next is a VWAP. Now on Thinkorswim, the VWAP has, it has an actual volume weighted average price line here. And then we have deviation bands, which are similar to Bollinger Bands. Some people use Bollinger Bands. I never did use Bollinger Bands because this has the study the deviation from the VWAP. And since I'm using the VWAP, I'm going to use these deviations. And what it does is it gives me an idea of how far down this stock can actually go. And you can see this kind of rode the lower deviation band. Anytime a stock is selling off hard and we get below the deviation band, I use that in my reversals. So if I see that happening and we're outside of this, then I know there's a strong reversal potential coming because this is not going to get too far away from the deviation band before we get a snapback. And so that's why these deviation bands are important. They're the standard deviation. Is the default on there. The only thing I did was change the color. And I changed these to yellow so that they match and I could quickly identify them. And, I changed the color to the VWAP so I could quickly identify it. Next comes the moving averages that I use. I've got the 9, which is the red line here. This is the 9 EMA. This is the 20 EMA. This is the blue line. Now, this is a new addition to my charts. The 100-day or the 100-period EMA. I'm saying day, but this measures the bars. So, the 100-period EMA is what I added because I realized that the stocks are starting to react to the 100 EMA. So I added that study, and it took a long time. It's not something I added overnight. I did a lot of back testing over the last several months before I made the decision to add this. Because the last thing you want to do is add a whole lot of garbage to your chart. Because you see the charts are starting to look crowded. And the more crowded your charts are, the harder it is for you to see the patterns and to read price action. So I try not to put anything else on here other than what I actually need. And then, we have the 200. So these are the 4 moving averages that I use on my charts. So my daily charts, okay, this was my intraday chart. Now I do have another study on here that gives me the red to green or the previous day's close. That you're gonna see that on the chart on my on the example that we're gonna do here in a few. But that's the only thing that's missing on here. That red to green line, all it is a white dashed line that you'll see, and that's telling me what the previous day's close was. All right, so here is my daily chart. On my daily chart, I've got the 200-day SMA. Remember, these are measuring each candle is going back for the previous 200 candles, which represents a day. So I'm saying the 200-day on the daily. The orange is my 90-day. The yellow is my 50-day, and then the blue is my 20-day. Now, on the daily chart, I'm using SMA, the simple moving average, because the simple moving average is more accurate over longer time frames. The EMA, or the exponential moving average, is what I use on my intraday charts, with the exception of the 200. These are more accurate over the short term time frames. So I use the EMA on my intraday chart, the SMA on my daily charts. All right, so now, last thing we're going to talk about before we get into our example, and this is very important for you to understand what I'm talking about when I say pivot points, because they're a great way to identify potential areas of support and resistance. And it's a very useful tool that I believe every day trader needs to add to their toolbox. It enables you to quickly calculate levels or identify levels that are likely to cause price movement. There's several different methods for calculating pivot points, and I only use one, and it's no calculation. I'm going to explain that to you in a second. But there's a different people, you come up with different pivot points, but I've proven to myself time and time again that the simple way that I identify pivot points works. They're very accurate. And the success of how you use that system, it lies squarely on your ability to implement it with your trading strategies. So you have to understand how these pivot points actually react with your trading system. And it's up to you to do that. So, having these pivot points, I call them supply zones as well. So each pivot point I feel is going to have buyers and sellers there, because you have traders sitting there waiting for a stock to hit that point again. And we prove it every day. When it hits the level and you see time and sales and the level 2 wake up, you're hitting a supply zone. You're hitting a zone where there's buyers and sellers sitting there ready to move that stock one way or the other. And that's where pivot points come in play for me. And, here's the standard definition of a pivot. It's a central point, pin or shaft on which a mechanism turns or oscillates, or a shaft or pin on which something turns. And being, having a scientific and engineering mind, this is a simple machine. Is what you're looking at. So here, this could be a fulcrum, and then you could actually use it to lift something. So I would call it a simple machine. So the pivot is an actual point that allows this to change direction. If this moved to the downside, this would have pivoted to the downside. Once we get back to the top and we start to move back this way, then this has pivoted to the left side. So it can pivot to the right, pivot to the left. The way we use that on a stock chart is I'm looking for a stock to come down, create that point where I can draw this line right here. And that point, that apex, is what I call a pivot point. That's the point where the stock changed direction. And so it has a price, 1941. This is where the stock pulled down, it bounced and pulled back up. And, this is where we made that change in direction. Hence pivot point. I've got a line here that can pivot this way or pivot that way, right off that point. Some are easy to find and some are not so easy. They're not so pronounced. So here's another pivot point here, here, and here. And what you'll notice is if I mark this pivot point here, twice in the future, we bounced off the same pivot, which meant every time we pulled back, there was a line of sellers sitting here. We sold off here, there were sellers to buy it up. Fell back to this level, there were sellers to buy it up. We fell back to this level, there were sellers to buy it up. And then this time, we actually fell through. All of the sellers were gone. And here we would continue to go down until we run into another, area where buyers decided they wanted to come in and buy, and it creates another level, creates this pivot. And the next time we came back down to this pivot, we gapped down to it. It held as support for like 4 days before we actually lost it. Sorry about that. So you can see these pivots, a lot of time you'll set a pivot here. See here, back here, it respected it here. We got down, it respected it here. Here it was support, here it was resistance. Twice we banged off of this resistance before we actually made another move down. And at this point here, this stock took a pause. So this was a legitimate pivot, as was this when it put in. It was a legitimate pivot. You can do this, and what I did was before I use anything, like I said, I always go back and I do my homework. And when I did this, I realized that this was the most viable way to do it. And so I adopted this. It was just that simple. So hopefully this explains to you, we'll go back, how to find my pivots, what studies are on my chart and why I use these studies. So now, I'm going to take you through my process, how I find the stocks. We're going to take a deeper look at my scan, the main scan that I use, and how I identify them, how I vet the stocks, and how I trade the stock. So you'll have a real good idea of how I trade the open. All right, so let's get into an example of my morning. I guess is a better way of putting it. Okay, I've gone to the gym. I've done my workout. I've taken my son to school. I've gotten my coffee, and if I want to eat something, I've got it together. So now I'm sitting down. It's about 8 o'clock, and I'm sitting down at my desk. And what I'm looking for, well, 8:30, I'm sorry. That's when I really start looking at this. So 8:30, I've got, a decent list here on my ORB pre-market scan. It's the first scan I look at. And I know I've got, these are companies that are reporting earnings that day, whether they're up or down. And I could quickly, all of these are down because they're orange. So I could quickly run through here and see if, any of these are actually on earnings today. I could quickly look over here. But what I'm doing is I'm going to go through and I'm going to give it the eye test first. 17 million share float, no go. SHLX, that has potential. SNHY, this has a 24 million share float, but $56 stock. I keep an eye on it. MAT, 341 million share float, so $14 stock. I could size up on it. I could feel a little safer because we have a large float. So yeah, I will be looking at that. In XNet, 55 million share float, 237 million shares outstanding. So I'd write these down. If you don't have a separate monitor that you can vet these on, I'll just write these down and start going through the process. So the first thing I'm going to do is I want to know what's behind the gap. Why is this gapping up? So this is where my FinViz comes into play. Okay. Now I've got FinViz Elite here, but the free version works just as fine. I like this because they decided to offer this to me for me to try out, and I did, and so I'm still hooked up with them. But if not, I would still be using the free version, and it all does the same thing. So what I do is I type in the ticker. Now, granted, this is going to be off because the scan is from, I think, February 2nd, which is last Friday. So we're going to have to go back a little bit and find the news from the 2nd. I think I wrote. Hold on a second. I might have wrote down the wrong number. SHLX. Sometimes I've got dyslexia and I'll write down the wrong one. So let's look at SHLX. All right. So I get a quick view of the chart. And right here, we have multiple bottoms here. But on the 2nd, we're over in here somewhere. I don't think we've gapped down yet. I have to look and see. So let's go February 2nd. Okay, public offering was after the close on February 1st. Announced the sale of 900 million of common units. Okay, so anytime I see a public offering, unless I caught it when it was announced to where I could have caught the dip, there's no trade for me in this. So this doesn't make my watch list. So we've got SNHY is the next one. Let's see, February. Okay, that was a public offering too. 8:30 that night, the previous night, they announced pricing of public offering. So that's a no-go. I don't trade public offerings because once they make that initial move, they'll drop to whatever the offering price is and typically trade sideways from there. Okay, MAT will be next. So let's say February 2nd was earnings. All right, so they're down on earnings and sales miss. Now another thing, if I can't find news here, FinViz, has this crowdsource feed going. So a lot of times I can find the news here that hasn't hit here yet. So this is a good resource as well. You got good crowdsourcing, right here to help you make your decisions. So MAT, this is definitely going on my watch. I'm going to vet it. Well, I'm going to vet it to see if it's going to make my watch. Okay, and then the last one is XNet. So, I usually glance at this chart too. But since we are, a week off, I guess we were probably up in here somewhere. I'm not really paying much attention to it. But I do glance at it when I'm actually vetting that day. Because this is the first chart I actually look at. I don't get to look at it on my Thinkorswim chart just yet. It's got to pass this vet before I get there. All right, so February 2nd. This didn't come out till the afternoon. So there was nothing that morning that told me why this is going down. We haven't heard anything. So what I would do was look over here, and if I found the news, like this isn't gonna, it's gonna stop. But this is all the stuff on StockTwits. Is what you're seeing. Now the other thing that I can do is I can go to TweetDeck and type in the stock, and it will tell me, give me whatever news or what anybody's tweeting on that stock. And typically, if I have to go that far, I probably won't trade it. So in this case, XNet didn't make my watch list because of the lack of, I didn't like the catalyst, or I couldn't find the catalyst, one of the two. Either way, it was out. So now what I'm going to do is I've got one stock on my watch, that's MAT. So now I'm going to use the big gapper list. Now this is finding stocks that have gapped down or up at least 4%. And that's really the only filter that I have on this. So this gives me all prices and all floats. It doesn't matter. All ATRs. So what I do, my main concern is volume. If it doesn't have volume pre-market, I'm not interested in it. Okay, it's just that simple. So I'll go down, look for stocks over 50,000 shares of volume. Here's one, SNE, which is Sony. So I come over and I look. It didn't hit this scan because it's got a 1.26 billion share float. The gap is 7.3%. Average true range $1.23. So everything was good about this outside of the float. So I'll definitely vet it. Here's Sprint, but only a $5 stock, 2 billion share float. We probably won't get much movement. It's only an 18-cent RSI. I mean, ATR. So I'm going down 104. This is a $5 stock, no dice. TGTX, $11 stock. It's at 41,000, but volume, but 37 million share float. I'm not interested in it. ERJ may hit our scan. It's at 39,000 shares of volume, and it's got 30 minutes to hit my scan. After 9 o'clock, I'm done. My watch list is set. It's set in stone, and I'm watching those stocks from 9 o'clock to the open to find out whether I can get a good bead on where the stock's going to open and where it's going to go. So I'm going down. Nothing else. I see nothing else on this scan. So let's do ERJ, because if it's this close, I'm pretty sure that it's probably going to hit my scan. So I would do ERJ too in this case. But what I do, everything starts with the daily chart. So let's do MAT. Everything starts with the daily chart. Okay, this is how the daily chart looked the morning of December 2nd. Okay, this stock has been selling off. We're here at the open. And where is it trading right now? Now on my regular platform that I trade off of, I've got a daily chart and then a 5-minute chart. Because what this does is this allows me to this allows me to see both charts at the same time. I'm able to see windows of opportunity at the same time. So I'll show you what I'm talking about. I'm going to go ahead and do this one. I'm going to go ahead and make one. Give me 1 second here. So I detach this chart. What I'm going to do, and this is what you can do with your Thinkorswim. I don't want to mess up the chart that I already have, so I'm just going to detach it. I'm going to make 2 charts side by side. I'm going to make this, I'm going to link this with that chart. And I'm going to add my study set for my intraday chart, because this is going to be a 5-minute chart. And we're going to do the settings real quick. Doesn't take much. Synchronize. Color of symbol ticks. We want to fill that up. And I gotta have my black background. Alright, so I've got a 5-minute chart here, and I've got my daily chart. Now remember, the daily chart, this is where we're doing our pivot points. So I'm going to look. The reason why I need to see where this is trading on the daily intraday chart is because I only want to mark my pivot points around the area that we're trading that day. if I'm marking it up here, it doesn't make any sense because we're not trading there just yet. So there we go. I'm looking for places on the chart where the stock changed direction. Some are going to be more pronounced than others. Let me take the patterns off so it'll be easier for you to see. Alright, so you can see we have got down well below, so I'm going to have to go back and we're going to have to find, pivot points where we traded. Alright, so now we've got our 52-week low here, and we've got our, another pivot here, but in this area we have this huge window. So I'm going to go back and see if in that window do we have any more price action for the last year, and we don't. This is a home run A+ setup for me. A home run A+ setup, meaning look at the window of opportunity we have. We're trading in this right now, 14.35 down to 12.90s. This is a $14 stock. You can size up on it. I mean, I'd take 2,000 shares of this if I wanted to. This is a huge opportunity. We've already traded as low as $13.91, so we have already closed up half of this window. So this is a real good opportunity here. All right, so now I've established my watch list. We vetted the stocks. We've decided that, there's windows of opportunity both sides. My preference is to the downside. I think that would be the easiest move to the downside. But we've got to make a plan either way, because we are sitting on VWAP here. We're kind of hanging around it. So this can go down or it can go up. We don't know yet. We had a huge sell-off. There hasn't been a whole lot of profit taking, to be honest with you. So I would expect to pop to 14.35 or maybe this 14.51 level. This the 100 day here, 100 period right here around 14.50. That would be my ideal. If it went up, this is where it would reject and then pull back. So that's only about 30-40 cents from where I would want to open. Now, even though I would take 1,000 shares on this, that's not enough for me. So I would wait for it to settle down. That would be my deal. But just because it had bad earnings, we can't let that affect our mindset. We got to be ready to trade this whichever way it wants to go. So this is why it's important to watch all through pre-market. So now we're at the point where it's about to open. And you can see we kind of grinded off VWAP. We don't have any volume still. We're going to have to wait and see if we get some volume to come in. But, I'm looking at the fact that the deviation band from the VWAP and the VWAP has made this big move to the upside. Now, if I had a gambler's mentality, or where I could accept more risk, I would jump in long, because right now this is telling me we're about to make a big run up. I mean, it could potentially hit the 200 here. That's less than a point away. And this has an average true range of about 80 some cents. So there's no reason why this can't run up and tap this. But I'm not that trader. I have to wait and let my strategy establish itself so that I could base my risk off of it. So my goal is, if I go long, then I'm going to use these levels here. We got one up here, 1593, that's not on the 5-minute chart. We've got red to green. We've got this 1517. So based on where I get in, these are potential targets here. These levels of support or resistance. Now, the first 15 minutes, these don't really mean much, because you have the volume and the momentum that's going to just drive it through these moving averages. So I don't really, these moving averages and pivot points. So I don't really hold much to this so much at the open, because that volatility that comes in with the volume can just make it disrespect all of that. So we need to watch this as we get ready to come in the open here. We got about 20 more seconds before the market opens. And if I start to see some activity in this, this is where I would jump long and, just to see what it did. I'd have a market order set. Okay, the market's open. I would have a market order set that if it fell back, I could get in. Now here's another entry strategy that we could have used. Now it looks like we're trending up. We're going long. I could have waited for the open, look for the pullback and tap of VWAP, take it off this 1435 level. I could have jumped in early and 1480, take some off. If we got up to 1517, take some off. That's another strategy. But I don't like to trade that so much. I like the slower moving strategy. So I'll sit and I wait for the 5 minutes, the 5-minute opening range to set. So we probably set the low already here. So I can go ahead and mark this just in case we come back. Because right now we don't know what the hell it's going to do. It looks real strong. So the next thing, if we miss this bounce and hit off of the VWAP, the next thing is catching it on a 2-minute opening range breakout. This is speeding up this chart. Because this thing ran, look how far it ran from the open. From 1430 up to 1480, almost 50 cents. 50 cents on 1,000 shares. That would have been $500 right there. We would at least locked in half. So this thing is showing some solid promise here. So, here's the 2-minute opening range high here. We can buy it once it breaks the 2-minute if we want to. We can buy it, and once it hits 1517, we can take some off. When it hit the red to green, we could take some off. We could do all of this. But I'm slowing down. I'm sticking to my 5-minute opening range trade. But obviously this could have been very lucrative. So I mean, we still have 2 minutes left in this candle. And look how far this thing has run. It's run 1 point already. It looks like we're kind of respecting red to green here. But yeah, watching the stock that you're looking at and that you would like, you know, this is setting up to the long side. I'm waiting for the setup. And this is where the frustration sets in. This is where you jump in ill-advised, chasing a stock. In this case, you would have made some money. And this is one of these trades that you may live to regret. Even though you make money on it, you established a bad habit, and the next time it may not end up so pretty. Okay, so we might have put in our top. We are within we're within 30 seconds of the close. Now I know this is a huge candle, but I'm gonna be ready. We gotta be ready to get in on the break of the first 5-minute candle. Now we're gonna see on the 2-minute we're pulling back, which is not a good sign for the stock to look to break the 5-minute opening range high. See, we're pulling back. Okay, there's the first 5-minute candle. And we're starting to push up. So we can do two things. As soon as we crack 1551, we can buy. Alright, so we got in. We broke the 5-minute open range high. We got in. Here is that level. What's that? 1593, or we could say, 16, we'll sell half. Because this is the next pivot. So we got in on the 5-minute opening range. If we lose this range, meaning if this candle pulls back and closes below this, then we're out. So once we hit 16, we're going to sell. Or we have to be ready to stop out if we close back below this. We actually hit that level. Probably should have sold some. And if you ask me, do I use market orders when I'm covering, when I'm trading? Yes, I do. I see very little slippage. If you're working with a decent broker, you're going to see very little slippage. And you're trading a stock that has volume and it's not jumping around. It doesn't have these huge spreads. So through 1590, we're going to go ahead and sell half. Alright, so we've sold half our position now. And we have to see just how far this is going to go. Now at this point, this is where a little bit of anxiety comes in, because we don't know where's the next level. Okay, here's, let's see, 1616 is gonna be the 20-day. I mean 50-day. So we'll put that in there, 1616. Gotta make it yellow. And then the next level is 1660. So where would we put we definitely want to cover in between here, because we want to lock in profit along the way. We don't know when this is going to turn around. So around 1625, 1630 is where I would want to take my next piece. So that's going to be 25,250. So we're at 35. So I'm going to sell my next piece here. Now 1650, 1660, that's going to be the last time I sell. This is going to be my final target. Now, I don't foresee this going much further than this. I would sell here, look for it to pull back. You know, we don't know how far it's going to pull back. It may pull back to this opening range high here. This is normally where we like to see it pull back to, the opening range high, and then we can take another trade off of it. So anything through 1650 up to 1660, I will look to take off. We tapped, we got up to high 1649. And also, if we pull back through this 1593 level, then I will take the rest of this off. So we're looking to see, can we get this, or is it going to turn here? All right, so it's hit our target, and we have to be out. If we don't take this off and we leave it on and we kind of wait and see what's going to happen, a lot of times we may not get it. So what I did, I scaled out. I took money profit along the way, because we don't know if this is going to turn around. You know, we can get, people at any point can decide, okay, we're where we need to be. We're going to sell this thing off. And look at what this did when it hit up here. Went all the way up to 1676. You know, but we were looking at this level here. We got our profit, and we're out of the trade. 637, just that quick on a morning trade. And I know, you know, this is a simulator, but using 1,000 shares, you can get fill in a live trading account without any problems. You see me do it every day. Every day. If you're not in the community, you see my live trading account every day. It's streamed live. You see the orders hit, you see them execute, and it's nothing. Now, yeah, if I had like 10,000 shares or something, you know, yeah, it's easy to fill it in the simulator, but try to do it live. You know, a lot of guys have found trying to do that, you know, it's beautiful in the simulator, but when you try to do it live, it doesn't work that well. It's not as what it seems. So, you know, but this is one thing, when you're trading smaller size like this, you really don't have a whole lot of trouble getting your orders filled. And this is what we do every day. You know, some days it works perfectly like it did here. Some days it doesn't work. We don't get the follow through. It pushes up over this and then it sells off. You know, we can't predict that. We just have to be ready with our orders, you know, to get out. And I know it seems so simple. It sounds so simple. But when you're under pressure, when you're under fire, when you're under the gun, when it's live, it's very difficult to execute. So that's why you have to get screen time and you have to practice in here to build up your confidence so that you won't think twice about getting in when you break this level. And having the trust that, okay, if it doesn't work, I know I can stop out and we can reset. And see, and what I do, the secondary part, in the interest of time, I'm not going to go through, you know, all of that, you know, what I do. But I do cover it in the classes. I do talk about it in chat when I'm taking these trades. I would be looking for this to pull back to either the VWAP or back to this opening range, and I would catch the trend continuation back up or the bounce back up. I would ride it until it fails and we start to, you know, lose the trend. Okay, so right now there's no way I'm going to trade on this candle because this is just big indecision right now. We ran up to this level. We had a lot of profit taking. And, you know, you don't know if everybody's out. If this is going to trade sideways, it could flag here and break out. So this is why once we trade this stock, it's on my watch list. I'm going to have it up for the rest of the day. Because I could trade this 2 or 3 more times, make 3 times this much, and, you know, be set. Have a good day. Traded 1 stock, you know, 1 kill, and we're ready for the next day. My risk was avoided. You know, I avoided excess risk. I stuck to 1 stock that I got the pulse of. Watching the price action, you get a feel for the rhythm of the stock. And once you get that rhythm, then you're able to trade it, you know, effortlessly. And, you know, that's what I look for every day. And I like to play off 1 stock every day. So hopefully this video will help you understand a little bit about how I trade, what I look for when I'm doing my recaps. You understand where the stocks came from, what process I went through. Meaning if you like it and it looks good and you really want to learn this, you know, join the community. You know, 1 subscription and you get access to all of the classes. You get access to the live classes, and you get to see me do this live every day. Win, lose, or draw. If I make a mistake, you get to see how I adapt to it. You know, if I blow up, then you get to see me blow up. You know, lose my cool. But it's real life, you know, unscripted day trading, because we don't know what's going to happen from one day to the next. All right, so we're going to, well, I'm going to answer a couple of the most common questions I've been getting. So the first one is, why don't you show live trades on your video recap? Well, I trade live every day in chat. And the last thing and the worst thing you can do is worry about recording your trades while you're actually trying to trade. I don't want any other distractions or trying to remember if I cut the screen, did I cut my recording on, and if I'm sitting here letting the thing record the whole time, I don't want it messing with my memory or anything to do with my trading. I want to have as few things running on it while I'm actually trading. So if you want to see these trades happen live, just join the community. You see it happen live every day. You know, it's streamed via live screen share, and you see every move I make. You know, except for when I go to lunch, it's impossible for me to do it. I tried the remote access deal, but it doesn't work. So when I'm at lunch, you won't see it. But before I go, I always lay out my plan as what I'm looking for, you know, what stock I'm looking at, what I'm looking for it to do to trigger me to trade it, so you know exactly what's going on. Or sometimes if the internet goes out or a screen share, you know, if we're having trouble with screen share that day, it may freeze up. But other than that, you will see these things happen. And most of the time, if it freezes up, you'll catch the meat of the trade anyway, so you won't really miss much. Next question is, do I give out trade alerts? You know, again, I trade live in the community. You hear my thoughts. You know my watch list. You hear why the stocks are on my watch list. You hear me talking through what I'm looking for to get in a trade, and you know, and all of that. So it's not, I'm not just giving trade alerts and getting this stock at this price. You know, that's baloney. There are things that have to happen in order for the stock to set up and go, and we're able to take the trade. And I'm not going to know what price it's going to be. You know, I'm looking for it to claim a certain technical level, and that's what we're looking for. So you know the stocks I'm looking at, you know what I'm looking for, and you see me execute. You know, so as far as typing in everything, there's no way I can focus on typing in alerts and all of that stuff and actually trade. So my focus is teaching you by giving you live demonstration and instruction, and I'm modeling. Well, I'm not really modeling it. You see me doing it. I'm going in the trades, how I manage them, and how I exit the trades. So you get all of that. Another one is, why do you trade higher price stocks and smaller size? The higher price stocks tend to move more fluidly and more, they follow a trend more. So I don't like low float stocks, low dollar stocks, because they're easier to manipulate and a lot easier to lose your money on, in my opinion, you know, based on the way I trade. Now, some people love those. They love those quick hits. That excites them. And that's great. I'm not saying that's wrong. But for me, I have to do what's right for me and what I like and the strategies I like to trade. So the higher price stocks with the slightly higher floats work great. And they tend to give multiple point moves. So I'm able to trade smaller size. So my risk is a lot less. So I trade smaller size, and we tend to get larger moves. And that's, why I do that. Next one is, do I have a daily and weekly goals? Because I never talk about them. No, I do not have daily or weekly goals, or monthly goals for that matter. I think when you're trying to hit a specific target, like if you go into the day and you say, well, I need to hit $250 a day, that's my goal, and you're at 230, and you're like, well, all I need is a small trade I can get a couple cents on, and then you go in, and next thing you know, you lost $100 and you're that much further away from your goal, and you take another ill-advised trade, and before you know it, you're down $200. So daily and weekly goals doesn't really matter to me. I'm focusing on one trade at a time, and I'm focused on maximizing the potential of that one particular trade. And if I do that, if I have an effective trade plan and I execute that trade plan, I'm going to get as much as I can get out of that stock. I'm going to maximize my potential. And if I do that, at the end of the day, my account's going to look pretty good. And obviously there are days where the market doesn't work well and things don't really go your way. Then that's fine. You can't let those days get you down. You shake it off and you move on. It's just like a professional athlete. You can, if you're a basketball player and you miss 10 shots in a row, you got to keep shooting. You got to figure out what's going wrong and keep shooting. Because if you quit, you're going to lose your confidence, and then everything else about your game starts to fall apart. Same way with trading. If I lose on 3 or 4 trades, if I let that beat me down, and and I'm not hitting a goal that I have for myself, that messes with my confidence and starts a downhill spiral. So it's just a matter of focusing on one trade at a time, maximizing the potential of that trade, and then move on to the next. That's my philosophy. So guys, if you have any questions that you want me to address on my videos, just go ahead and shoot them to me, and I will definitely do that. I'll answer them for you. And if I don't, feel free to shoot me an email and request an explanation, because I try my best to answer everybody and get to everybody and all that good stuff. So again, I hope this video helped you understand what I do, why I do it. Now obviously there are going to be days where I am just out of sync and I'm not following my process and I'm just way in left field. Those are the days that I have to recognize that and stop and just walk away. Then there's no trading anymore. There's no need to continue to waste money and lose money when, my head's not in the game. All right, guys, so take it easy. And again, if you have any questions, feel free to email me, ed@averagejoetrader.com, and I'll be glad to get back with you.